morning, Delta Property Fund has reported first half results with highlights, including a distribution of 32.5 cents per share, linked unit rather, met, and the property portfolio value exceeding 4.8 billion rand. Now, joining us to explain more on the numbers is Chief Executive Sandile Nomvete. Mab Nomvete, thank you so much for your time today. We were just discussing a little bit a moment ago, literally, just with regard to the amount of growth that you've managed to see in the company, listing from initially 29 properties to now 49. How did you do it?
Well, through hard work. Good morning, Dave and Gugu. I think, you know, as a management team, we've been very focused in the basically government space or quasi-government or sovereign underpin as such. And, you know, we think that we've got a leverage over our competitors in the sector, and we've managed to basically position Delta Property Fund pretty well. What that has resulted in is that, you know, we basically have attracted a lot of interest from vendors who are looking to exit the space, and they would like to obviously partner with somebody who is a specialist in the sovereign underpin space. And correct, it's taken, you know, a lot of hard work behind the scenes to make sure that our asset management team is bulked up. Our property managers have grown their infrastructure. So it's taken a lot of hard work to grow the assets from 20 to 49.
Now, you're part now of the FTSE JSE listed property index.
That's
what
correct,
difference does that make to the business and, I suppose, perceptions of the business?
Well, I think it's more perception than anything else. I think for management, it's business as usual. But more importantly, it does improve on the liquidity of the fund. You know, index traded funds obviously will pick up some of the stock, which ordinarily they wouldn't have picked up before. But for us, you know, I think from being a property fund, we basically focus on the distribution. As Gugu has mentioned earlier, we basically are announcing today for our interim distribution of 32.51 cents, which is on target, given that, you know, we basically had given guidance to the market when we did a revised pre-listing statement after doing, you know, one of those major transactions, which was part of the 29 properties that we bought. We gave guidance to the market that our annual distribution will be 72.5 cents. So we're well on track to achieve that. We're quite pleased about the efficiencies that we're seeing coming through. In fact, the 32.5 cents is slightly ahead of the 30.5 cents that we actually had given in that revised pre-listing statement.
So good news for investors. But coming back more to the business operations side, we've seen a lot of developments taking place with regard to underdeveloped areas, not necessarily underdeveloped, but areas which were prime areas, and like the likes of Braamfontein, Newtown. Are you looking to enter into those areas in the months to come, as you mentioned that you are looking for new acquisitions?
I think we predominantly are CBD focused, and I think this is probably one of the unspoken benefits of the government initiatives or BEE government funds which are out there, the amount of reinvestments that they actually plow back into the CBD. From a Delta Property Fund perspective, we have a board-approved CapEx budget of 108 million, which is basically all going back into CBDs. Particularly, you mentioned the Johannesburg CBD. You know, we basically have about 3 properties in Gandhi Square, some of our best performing assets. So definitely we are part of the rejuvenation of these CBDs. And
it's getting to the point, Sandile, where people are saying if you're not in the CBDs, maybe you're a bit late.
Yes.
And I think we made that remark the other day. Whereas if you'd got in the mid-2000s, everyone said you were mad.
That's correct.
And that you're going to lose all your money. So when did you get in, and is it too expensive to get in now?
It's actually, you know, I think the amount of trading that actually happens. In fact, we took some of our investors around some of our properties in the CBD, and they were actually amazed how much trading just happens at street level. Granted, you know, Delta is not really a retail fund, but clearly there's still a lot of foot traffic coming through, you know.
Well, give an example of one of the properties where you see this.
Well, a classic example basically is in the Durban CBD, where we own 88 Phil Street. You know, we've got a waiting list in terms of retail tenants waiting to come into the building. We recently bought a building, Embassy building, down in Durban as well. It had 3,000 square meters of vacant space, and we've started filling that space, which is obviously bodes well for unit holders, because that is, we had zero rated that rentals into our forecast. So that is basically a potential upside for Delta unit holders as we fill that space.
Coming back to Gauteng, we know that there's developments with regard to the Gautrain, looking to expand its operations from Boksburg to Reimsig, upwards of Pretoria, as well as coming down to Naledi and Soweto. Are you going to position yourself around any of those nodes around the Gautrain?
Well, I think it's quite difficult to actually move to where the trains are. Traditionally, in the government space, basically, there's certain nodes where government needs to be. I think the rationale is that typically, as a user of government services, a person should be able to walk from building to building. So we are basically driven by where our tenants want to be. And should there be a change of strategy, which there's absolutely no indication that government departments are looking to move from the CBDs. I think at this stage, that's probably not where we're seeing potential growth at this stage from a location perspective.
What about the smaller towns? When I say smaller, anything outside the big metropolises, Pretoria, Johannesburg, Cape Town, Durban. And I remember Mark Wayner with his fund saying they were actually getting out of places like East London.
Yes.
They said the local services weren't good enough.
Yes.
It wasn't worth the effort of being there. But where one person sees a problem, other people see opportunities.
Indeed, and that's exactly the case in Delta, where people see risk and noise around government, we see opportunity. I think just back to your point about people, a few years back, we're saying that the CBDs are down and out, and we were seeing opportunities, and we took opportunities to invest at the time. So just to mention more to your point, we are represented in all of the 9 provinces. We even in small towns like Kimberley, Polokwane. So we do see pretty stable trading environments, particularly because of the lack of competition in the smaller cities, actually.
Interesting.
Sandile, before we let you go, with regard to Delta Property Fund and maybe accessing more capital, we've seen the likes of Growth Point Properties as well as Redefine accessing the US market with American depository receipts. Is that something that Delta may look into in the future? I
think in the short term, I think we've got quite an aggressive strategy. We have a vision to obviously grow the fund within South Africa, and the target that we had at listing was to reach 7 billion rand by 2017. Now we're currently sitting with 4.8 billion rands worth of assets already in our first year. So given the pace that we are able to effect transactions in South Africa, I think we're probably still some way off before we start looking elsewhere for greener pastures.